Hello everyone, welcome to Smart Investing. So this video is going to be the continuation for the banking services sector. So let's begin. We have 5 stocks that we're going to be going over. So for the first stock, I'm going to be starting from the bottom and then working my way up all the way to the top. So as you can see, ASRV is the first one, INBK is the second, THFF is the third, PMBC, and then WFC, which is Wells Fargo. So, first one up, we're going to go through fundamentals, some technicals, and some quants. So, today is September 20th, Tuesday. It is 11:11 p.m. And obviously the markets are closed, so we're just doing a quick evaluation on these stocks. So as we can see, right away, $66 million market cap, 52-week high and low. So that is a difference of about $1. Not much of a difference. So this doesn't matter to me, the market cap, but based on market caps, for some reason, Wall Street likes small caps, at least in the billions. For some reason, they don't like extra risky ones that are in the millions. So, what I'm saying is, I have no preference as to market cap, but since this is a very, risky company that's not in the billions, uh, right away, it's much harder for it to gain interest. So pretty much it's like an automatic no. But then that could also just be one factor. And then also, if it has gained in range for the 52-week high and low, even, a few dollars, then that might make a difference. Because it might have even interest for the week, attention for the week. So apparently, it doesn't look like it has gained any popularity, any price movement, or any interest at all from investors. The stock alone seems decent. I mean, they're if I did not know what their market cap was, and that was disclosed, I still think it's too cheap of a company. Obviously it has work to do, but then also it is undervalued. They are, I don't know how that's possible, but they're expected to grow the PE to 14 next year. Dividends, they only pay 12 cents a year. Dividend yield is only at 3%. We're going to look at the history of the dividend yield. So obviously, if you invested before 2020, you would have wound up flat. And then even around a year later, in early 2021, you would have pretty much gained your money back in the $3.80 range, around that area. So between $3.75 and $4. So, there hasn't been much of a price movement for the past 5 years. So technicals, it failed. And then for fundamentals, we're going to keep going on that. And so fundamentals and then the quants. Highest rating for the value. And for the value, it had a rating of 8.83. I'm not sure if I agree with these numbers. It's hard for me to decide a number. I can only say if it's in the middle, yes or no. When it comes to these numbers, it's a little more accurate. So we're gonna see, hopefully, if they have some numbers for us here. So we have some return on equity. It's not showing me margins. Obviously, their bank, they're highly levered in debt. And let's see what their net income is. Net income has pretty much grown the last 3 years. Revenue and operating income is not showing me. Balance sheet is not showing me. Uh, it's tough to evaluate the company when I'm not getting the proper info that I need to evaluate. So we're gonna look at the cash flow real quick. It's at uh, 9 million. So plenty of cash flow. I think that's why they gave it a high rating for the value. Now for dividend history, you can see they've been paying. They have no splits, and apparently, um, do they do anything different aside from regular banking, which is what I want to see, what is what I'm looking for. Yeah, pretty much they do just regular banking like everybody else. Nothing special about it. So for this company, right away, um, they have a lot of work to do. So I'm gonna say no. Again, it's not a bad company. It's not bad, but it's not good. Uh, they do, like I said, they do need some work. They do have the cash to cover it, but I guess they gotta put that cash to work. I don't know what they're planning to do with the cash, but they have to invest somehow. So we'll see what's going on with the company. Hopefully, they can gain more exposure and do better in the future. But for this year, I don't see them doing that good. Next up, IMBK. So IMBK is let's see here, $342 million market cap. Much bigger than the previous one. So we have a decent bit of range comparing for the 52-week high and the 52-week low. PE is at 8, so show me that's undervalued. Some pretty good earnings. That's fairly respectable, especially for the banking sector, which is a 4.5. So 4.58 to be exact. They're giving a dividend of 0.24. Obviously, the yield is not that much, but with the price range and their earnings, that checks out. So this will definitely be a slow growing stock. Uh, I see this more as a growth stock. Obviously, it's going to take time, and they did accomplish again the exposure for the 52-week high and the 52-week low, which is pretty much the price range. So that's not too bad. Now we're going to look at the chart. So the last 5 years, pretty much swings going up and down. So obviously after 2020, excuse me. Obviously after 2020, things have gone pretty good. So we have here from $15 all the way to a high of like 52, and that was less than 2 years. So with that said, we're gonna look at the analysis real quick for the quants. Highest rating that they received was almost a tie, so they received more momentum and close to a 8.0 for value. These two are very, very close in ratings. So value and momentum, uh, they don't go hand in hand, but maybe at one point in time, the momentum was better at one point in time. So I think that's what gave it the share price. So now we're just gonna look at the financials real quick. I'm sure they've been doing pretty good in their earnings reports, so I guess they probably uh, outpace their estimates and their targets. And we're gonna look at their dividends real quick. So obviously they've been paying 6 cents for a dividend payment every quarter. Not much of a raise, but again, uh, the company seems like it's having good earnings, and they're doing a lot of the right things. I'm sure the cash flow is positive, and their earnings, for some reason, again they've beaten their earnings by quite a little bit. I wouldn't say it's a blowout, but still pretty good during a downtrending market, especially for a hard sector like the banking sector, like that. So we're gonna look at the annual. So in 2021, the return on assets have went up. Return on equity has gone up pretty good, actually. That's a pretty good number considering. Those are pretty respectable margins. So earnings per share, obviously in 2021, they did something really really good in 2021. I don't know what, but they have managed to do the right thing. This is not something you see every day. So they lower their debt. It's not by much, but you can say a little over 1% between 1.5% and 2%. So that's always a good sign when they're lowering debt. Again, you always see the banking services sector where they're like 90% in debt. And again, when they're beating their earnings, I guess they're using that to make payments for their debts. As you can see, the net income has gone up. Revenue is not showing me. Operating income is not showing me. I wish I had it, but it's not showing me. So again, the balance sheet uh, looks like it's getting better. I know, again, like I said before, 2% is not much, but over time, we'll see for the end of this year how their debt is, and hopefully it's gone down a little bit more, and see what they have done with their money and the money management skills that they have. And if that works out, this could definitely be a contender for a strong growth stock. Looking at it that way. So we're gonna look at the cash flow real quick. Again, I wish I had more info, but it's not telling me proper info. So I'm just gonna, go with what I have. Again, it's not as accurate, but my guesstimates, they're pretty good. So again, I can't say I'm as high as accurate as I want to be, but again, the information being presented to me, um, it's gonna be a little bit less accurate, less than 90%. Obviously more than 50, but again, with the information that I have, and then also the time frame that I have, I don't want to bore you guys, so I have to make it a little bit faster. So with the cash flow, so obviously they're cash flow positive. So it looks like they're at least or about more or less at least 20 million in cash flow positive. So they do have a chunk of change to fool around with. And again, annual dividend is at 24 cents per year. Um, for a growth stock, I like it. For a dividend stock, I'd say no. Uh, Overall, for a stock, it's really hard to say because I gotta give it to them. I have been through so many banking companies, and I've seen companies where the debt is like either more than what it was the year before or years before, or it's about the same. It's very, very hard to see a company in the banking services sector where the debt is being paid down. I really don't come across that a lot. So again, I really have to give them props. So uh, I think I would say yes to this company, just because again, that's a good range compared to other banks and companies within the price range. Again, I gotta give them props to having the positive cash flow. So positive cash flow. Sorry, that's not a. Now it looks like a positive cash flow. I gotta give them a plus for that, and I gotta give them another positive feedback for paying off their debt slowly but surely. Again, if it comes up where the debt is being lowered for 2022 estimates next year, which is we're only like 4 or 5 months away from that. So, I know we're still in Q3, but after this year is over, if this company, again, saying it out, if this company starts to uh, use their cash flow, some of it, even to pay down a little bit of debt, that could go a long way. And again, this stock could be even more than what it is. And it could be uh, more of a sign and more of a convenience to see this stock as a growth stock. So I am going to say yes to this stock for a watch list. Next stock up is THFF. So THFF, so we have $570 million market cap, PE ratio of 9.96, rounded off to a 10, slightly undervalued. Normal values close to a 15, so from a 12 to, so you could say maybe 13 to like 17, in that range. So dividend is more than the past two companies that I went over. So 52-week high, 52-week low, that's at least a difference of 10. Their earnings are, again, pretty strong for a banking services company. Now we're going to look at the chart real quick. So if you bought back in before 2020, before March, not much price movement. You probably would have gained in 2018, and that would have been maybe a solid $5. But any time between that time of 2018 all the way to 2020, you would have had a loss. Then in 2020, it started to peak back up again, breaking highs. And again, even to this day, it seems to be even breaking, I wouldn't say new highs, but it's still holding up and keeping above the previous high. So that is a good sign. So from 2020, late 2020 in October, went from pretty much $29 all the way to let's round it off to 49, no, 48, 48 and change. So that is quite respectable. And now we're going to look at the quant ratings. So highest rating for the quant they have, or close to it, the 7 ratings. So we have a 7.73, which is the highest rating for quality. And next up in line, not far behind, was momentum, rated at 7.32. So as far as momentum, I don't see that happening as of right now. I still think their volume has to be a little bit more. Their average volume is at 51K. Total volume for the day though is at 34. So it's not off by much. So again, it has to be above their average. Uh, Again, they just need some work, but hopefully this stock can be better than what it is. So at a 2.28% dividend yield, uh, over 2%, that's pretty typical for standard stocks in general. So that's pretty standard in dividend paying stocks. Anyways, so we're going to look at the dividend history. It paid a special dividend of 10 cents in January, and they paid a dividend of 63 cents. I'm just trying to see if they're paying rising dividends. So far, what I see in 2019 and in 2018, it looks like they paid 51 cents. Then in 2019, they paid 51 cents and then 52 cents. Then in 2020, again, they only made biannual payments, so 52 cents and 52 cents. In 2021, they paid 53 cents and 53. So slight rises in dividends every year, but again, not by much. But they did decide to do in January of this year, pay a special dividend of 10 cents. So maybe that with that payment alone attracted some interest at the time. Uh, and maybe it had that price movement in it in January. So we're going to look at the chart in January and see what happened in January of 2022. So we want to look at pretty much close to the dividend. So the dividend and the earnings report. So after the dividend, it pretty much stood flat, dropped down, then went up, then went down again. But again, this was in 2022. Let me see something. So dividend in 2021. So okay, it went up, then it went down, stood flat, slightly up, then slightly down, and it's starting to go up again. So I would definitely say yes for this stock for the watch list. Next up is PMBC. So this stock is pretty much flat, has no volume. I don't think this stock is active. Let me see. So yeah, since October 2018 of last year. Yeah, of 2021. So this stock is pretty much not active, pretty much counted as delisted. So again, not a good stock. It is pretty much out of stock. So last but not least, we have WFC, which is Wells Fargo. Obviously, very, very strong company. Over 19 million shares today that were bought and then sold. So over 19 million trades. Market cap is at 164 billion. I don't really care about that. If I want to see this, 52-week high and low. Okay, a difference of about 24. Better than most companies in the price ranges. Earnings per share, pretty respectable. Slightly lower than other companies with less market caps, but again, still respectable. And then obviously their free float, uh, they have so many shares available. So again, this stock ain't going anywhere. PE ratio of 10.4, and they're predicting 10.9. So obviously slightly up, a slight uptick. And now we're gonna look at the chart real quick, and then after that, gonna look at some dividend history and all that. So pretty much the stock is flat. I'm not too crazy about stocks that are flat, unless you want to endure the pain of just collecting the dividend income, and that's pretty much it. And we're gonna see some financials real quick. Debt to asset is at 90%. The debt is pretty much flat. It's pretty much flat. So we're going to see if anything has been done. So everything pretty much stayed the same. I wouldn't be surprised if the managers from 5 years ago are still there, still the same. So they only had a slight uptick, a big downtick in 2020, but it's even higher uptick in 2021 for their earnings. Uh, Net margins I don't have, but their debt is about the same. Book value slightly up, but years prior it's about the same. Now let's look at some cash flow. Total revenue is not giving it to me. Operating income, nothing. So we have balance sheet. So 17, 18, 19, 20, 21. So the debt slightly went up. If you notice, from there to there. From the last 5 years, so debt slightly went up. But year to year, it doesn't look like it's done much of a difference. Because it's gone up here, but then it's gone down again from 2019 to 2021. Let's look at the cash flow real quick, and then we will pretty much wrap this up. So negative 7.5 billion with the negative 11 billion. So we are looking at about 19 billion. What is their financing real quick? In the negatives as well. Wow. So they have about 30 billion in negative cash flow. But we're going to see. So for the net income, it cannot even cover their cash flow. They will still be down at least another 7 billion. So I don't know what this company's doing. Or they're I guess awaiting payments from other people and stuff like that. So we're gonna look at the dividend history. So for Wells Fargo, it went from 51 cents, which was pretty good at the time of 2020. Made the dividend cut for that year. And they have been paying 10 cents ever since 2021. And then mid 2021, decided to pay 20 cents. And then in 2022, decided to pay an extra 5 cents. So not bad, not bad. But again, the company has to do better in their cash flow. Need to have better money managers for that cash flow system. And then I guess slight upgrades or whatever they have to do to make this company do better. So would I add this to a watch list? I would say yeah. I give that a yes. So that's pretty much it. I think I have the 5 stocks done. So yep. That was 3, that was 4, and then that was 5. So that was it. Thank you guys for watching. I'll see you guys in the next one.